Hi everyone, welcome to another episode of Invest Power. Today I'd like to cover a little bit about how much deposit do I need in order to buy a home. So at the moment, the market is leaning towards first home buyers. People still want to buy a home to live in, and for that reason I'm seeing a lot more applications or requests coming through to say, I want to be able to buy a home. How much can I borrow? How much deposit do I need? And for that purpose, I thought I'll point out some of the common things, how to give you an idea about how much deposit do you need to prepare before you can purchase your first home. Okay, so let's get started. I've got two scenarios here. Basically, in order to purchase home, there's essentially two things. One, how much the bank is willing to lend to you, and that's depending on your serviceability. Number two, how much savings do you have that can actually cover all the basically purchasing costs. So how much the bank's going to lend to you and serviceability, I'm going to exclude from today's discussion because that's another story. But what I will cover today and what I want to mainly focus on is all these other costs that you will need to actually take it out your own savings account, just so that you're aware how much in total roughly you'll need to prepare for on that basis. So if the bank is willing to lend to you at 80%, in other words, if you have enough savings deposit, then we could look at basically 80% loan to value ratio. And at 80% loan to value ratio, there will be no LMI. So I'm using no LMI as one scenario. On the other side, if it's over 80%, in other words, if you don't have a lot of deposit and you need to borrow more from the bank, and the loan to value ratio is over 80%, then the buyer will usually be responsible for paying what they call the lender's mortgage insurance, which for short is LMI. And this insurance is not to cover the buyer, but it's something that to cover the banks in the case that if the buyer does default, in other words, if the buyer cannot make the repayments. So this is something that the banks is asking the buyer to pay, because banks are saying, hey, I'm lending you more than what I should be, so I'm taking on the risk. And for that purpose, I want to take out this insurance to cover myself in case that you cannot make the repayment in the worst scenario. So unfortunately, it is a cost that the buyer has to cover, whether you like it or not, it is how the banking system works here. But the good news on that is that LMI can get capitalized onto the loan, so you don't have to freak out. In other words, the bank is not asking you to say you have to pay this LMI from your own savings account, but instead you can actually get that LMI added onto the loan and pay that as part of your overall mortgage. So that's going down the LMI path. Okay, so let's have a look at the no LMI path first. Scenario one. Let's say assume that we want to purchase a home, $500,000 today. Now we want to borrow 80% LVR, which means 80% of the purchase price, which is $400,000. So bank's going to lend us $400,000. Now the remainder 20% deposit, it's going to have to come out from your own savings. Okay, so 20% is $100,000. Stamp duty, for the simplicity's sake, I'm going to assume that this is a first home buyer scenario, and we're in New South Wales, and therefore anything less than $650,000 is exempt, so zero. Okay, for simplicity. Now purchase costs. So what I usually have here in some additional purchase costs is related to, for example, borrowing costs, which banks usually charge, for example, like some application fee, loan documents fee, settlement fee, and all that stuff. And then also there is conveyancing costs, so your cost for the solicitor to complete this transaction. For simplicity's sake, usually I ballpark for $3,000 to $5,000. Okay, so roughly about $3,000 to $5,000. This is on the upper side, by the way. It usually trends towards the $3,000, but just to be conservative, I like to use a higher figure. so that you save more. Okay, so what does that give us? Deposit, stamp duty, and purchase costs. These are the three elements that the buyer have to fork out from their own savings account. So in this case, let's say I'm taking $5,000. So the total would be $105,000. That's not a small amount of savings. And understandably, not everyone is able to save up to that. So that is quite a significant outlay that's required with a no LMI scenario. Let's have a look at the one with LMI then. Assuming I'm a first home buyer again, and banks nowadays would like to help first home buyers to get into the market to buy their dream home. So in the best case, they usually allow the buyer to lend up to 95% inclusive of LMI. Okay, so that's important, 95% inclusive of LMI. So what that usually work out to be is it's usually around, say, 95%, but 92%, but I'm just going to use 90% LVR just so that calculation is going to be easier for me. So 90% LVR, which means banks will lend us $450,000. Okay, so instead of $400,000, they're going to lend us an extra $50,000 more. And that means we need to cover for 10% deposit, which is only $50,000. Stamp duty, same scenario, I'm going to put 0. And purchase costs, I'm going to put the same, $3,000 to $5,000. And I'm going to use $5,000 as the actual number to calculate, which gives us these three elements, $50,000 plus $55,000, which give us $55,000. So that $55,000 versus $105,000, there's a difference of $50,000. And in this scenario, I assume that most people will be a lot more happy by looking at this figure rather than this figure when they look into their bank accounts. You go, oh, okay, I don't have enough of that, but hey, I can purchase my first home using that amount. So I'm happy. Now, just the LMI as well, and I thought I'll touch on it here. So the LMI usually ranges between about $5,000 to $15,000. Okay, so when I say the LMI can get added onto the loan, that means yes, we are borrowing at 90% LVR, but the final loan value, the final loan amount, will have to plus LMI. So in this case, just for simplicity's sake, I say LMI is about 10K. So final loan amount will be $460,000. So $460,000 will be what's showing on your loan amount, and you will have to pay that off as part of your monthly or fortnightly repayment, depending on what you want to do. So I hope that gives everyone some clarity. It gives you two options basically to be able to buy your first home, but it also shows you some idea about what the difference is between LMI and the approach using no LMI, and the deposit that's required for these two different scenarios. Okay, I'm Dave from Lempower. Thank you for watching another episode. As usual, if you've got any questions about what I covered today, drop me an email, send me a request, or if you'd like to see more topics in relation to this type of stuff, just let me know. Okay. Until next time, I'll see you in another Invest Power episode. Cheers.